Welcome to Forward Thinking with Vitality, because the world is moving fast, the world of protection also needs to. Thanks for joining us on today's webinar, where we'll be exploring the trends impacting the life market in 2024 and beyond, and delving into some of the latest findings from Vitality's Life Claims and Benefits report we've recently published. Just to give you a quick overview of what we'll be discussing today, so we'll be hearing from a panel of experts as we delve into those latest findings and what they mean for you as an advisor and the conversations you're having with your clients. We'll also do a bit of a deep dive into some of the latest stats with Andrew McCurry from Vitality. Just before we go to that, though, we're going to hear from Vitality Life Managing Director Justin Tarog, who's going to just give you a brief overview of some of the trends impacting the market and some of those headline statistics.
Hello everyone, and thank you for joining this episode of Forward Thinking, our webinar exploring the trends impacting the protection and health insurance markets. In the UK, we've seen the economic outlook start to stabilise after a challenging year for our industry. We've seen interest rates levelling and inflation dropping back down to around 2%. And despite growing our own book of business and our member base last year, the Swiss Re Term and Health Watch 2024 reported a 5.5% drop in long-term protection sales during 2023. Positively though, our industry is seeing significant market growth in income protection and whole of life off the back of the growth in multi-benefit sales. We're also seeing consolidation with some key insurers exiting the market, highlighting the critical need for innovation and competition in the market today to ensure we can go further to meet the changing needs of our customers and help you grow your business. Within our latest Life Claims and Benefits report, not only do we show how paying claims remains at the heart of everything we do, totaling at £117 million, and 94.6% of all claims during 2023. We also aim to show through our data how we're responding to move the market forward with our unique approach to protection through three key areas. Firstly, how we are helping members live longer and healthier lives. This is something illustrated through data, showing that our engaged members improve their mortality risk by up to 49%, increasing their life expectancy by almost 5 years, through benefits that include health reviews, physical activity incentives, and mindfulness sessions. Secondly, how we are delivering unparalleled levels of value through behaviour-based premiums, with optimised members saving £43 million through premium savings last year, and £82 million in rewards from the Vitality program. Optimised clients are also 3 times more likely to engage in the Vitality program, and almost 50% less likely to lapse their plan. And thirdly, we'll show how we are responding to modern trends through more relevant forms of cover. Advances in medical technology mean people are increasingly surviving illnesses and experiencing more than one claimable condition during the lifetime of their plan. In our own experience, we paid 1 in 13 serious illness cover claims to members who had already made a claim, and 1 in 7 were for conditions not covered by a typical enhanced critical illness plan. We also now have 100,000 members protected into later life with our dementia and frail care cover, a unique feature in the market meeting a real societal need. All of this we are excited to explore in more detail with you today and debate with our expert panel of industry speakers. We hope you find it inspiring and insightful.
Thanks, Justin. But I'm now joined by my panelists, so Andy Philo, Director of Strategic Partnerships at Vitality, Julie Botha, Head of Advisor Development at Vitality, and Adam Higgs, Head of Product for Protection Guru. So Andy, I'm going to start with you. So why are reports like the one we've just published at Vitality, why are they important? Why are they necessary?
So the release of the annual claim stats is always an important part in any product provider's year. And it's the point where it actually discloses how many claims they've actually paid in the preceding year. So it's a really good way of advisors using that as a bit of a benchmark and an industry standard, I guess, to assess and compare the different insurance companies. Where Vitality is different is we do announce our claim stats, but we also talk about the benefits and rewards that our members are receiving. And we find that's really useful for advisors as well in terms of their advice that they give to clients.
Yeah, absolutely. And Adam, you spend a lot of your time, no doubt, kind of deep in these reports from across the industry. What kind of stood out for you looking at the latest stats published by Vitality this year?
Sure. I think from this year, and it's the same every year with Vitality, I think, just the sheer engagement with the Vitality program, it probably shouldn't surprise me, but every year the numbers and stats that are put in these claims reports around how people are using the benefits and actually gaining free coffees or engaging in park runs or whatever it is, it astounds me. I think it highlights one of the things that Vitality is better at than anyone else in the market, and that is getting clients engaged with the products that they've got. There's an awful lot of stats in there. One of the other things that really jumped out at me was with regard to the children's serious illness, where the second or third most claimed for condition, depending on whether the child was male or female, was actually congenital conditions. And that's quite interesting. You don't generally see that a lot across the market, and it really highlights that the comprehensive nature of the policy, and the fact that a lot of policies out there, particularly the core policies available from critical illness providers, won't cover those types of conditions. So that being the second or third most claimed for condition is really telling.
Julie, from your perspective, you spend a lot of time training advisors, kind of teaching them the art of engaging with their clients and hopefully getting selling protection policy to them. What's the kind of practical application for an advisor with kind of the data and stuff that Vitality and indeed other insurers release in these claims reports?
So I think most importantly, when it comes to having good sales conversations with clients, one of the biggest challenges that we face are these psychological barriers that we all have when it comes to seeing the value of protection. And I really think that the Claims and Benefits report is going to go a very long way to overcoming some of those challenges that we have every day when we are speaking to clients and trying to get them to see the value of protection.
Yeah, I guess it provides the evidence, doesn't it, that counters some of those, as you say, those psychological barriers that we know consumers put up, and indeed advisors occasionally as well throw some of those barriers up. So it sort of provides the evidence, doesn't it, that you can use to kind of counter. Well, look, we've spoken already about some of those stats, but I just want to take a moment now to do a bit of a deep dive into some of the latest findings that are published within that VitalityLife Claims and Benefits report. So we're going to hear from Andrew Curry, one of our kind of data experts who's been instrumental in putting this report together. And he's going to give a bit of an overview of some of those latest findings.
It's really about changing perceptions. That's the origins in terms of why we initially produced them as an industry, really looking to change consumers' views about the likelihood of insurers actually paying out. When we look at this year's report, it's really from our side about changing perceptions about what insurance can and should deliver to both consumers and advisors. There are three outcomes that the report itself really demonstrates. The first is in terms of better health for our members, where we actually find that due to the Vitality program, consumers themselves are actually living up to 4.8 years longer through Vitality. The second outcome on the basis of this behavior change is value, and really where we find that even on a bronze Vitality status, members are getting about 24% of their premiums back through rewards. And I think the real kind of third key outcome, and I think most obvious point to really make sure insurance policies provide, is that real kind of peace of mind when it comes to claim, and really demonstrating how our better cover has been paying off in the hands of customers. I think it matters because it actually shows insurance can be more than just paying out at point of claim. Yes, it should obviously be providing peace of mind in terms of making sure you and your loved ones are protected. But at the same time, that same premium that you can pay can help you live longer. It can provide you additional daily value almost immediately, and it can make sure you're getting complete peace of mind if a claim were to occur. So when you have a look at it, I think you could almost take every statistic and pull out an interesting story or an interesting reason for why it's important. But from my side, I think there are probably three key statistics I would pull out. The first, when it comes to claim, is that if you look back at serious illness cover claims during the course of last year, 1 in 7 of them wouldn't have been paid at another enhanced critical illness product in the market. I think that number itself is actually quite staggering, but more importantly, especially if you zoom into younger clients, you actually find that 1 in 4 claimants wouldn't have been paid at another enhanced critical illness cover for clients younger than the age of 40. The second key statistic for me really is multiple claims. And if you have a look again last year, was 1 in 13 of our claimants were claiming for their second or more time on their policy, and we actually had one of our claimants claiming for their fourth time. I think the point that I always emphasize in multiple claims is that multiple claims really are something that you as the advisor need to be considering today, because the average duration between claims on the Vitality book was actually only 71 weeks, which I think is quite a staggering number, and that includes both progressive, related, and unrelated claims. And I think the third statistic to me that really jumped off is actually you have to have a look at our income protection claimants. Our top claimant by occupation was financial advisors. And I think I find that quite staggering, because I think if we were to look at the industry as a whole, they wouldn't be in the top 5 occupations. But what that tells me is when financial advisors are selecting their own cover, they very often are selecting that Vitality's proposition. Kind of a key proposition of Vitality's shared value model is that if people get healthier, we can reward them through both better rewards on the Vitality program, but also lower premiums through the optimizer. If you look back last year, Vitality members saved about £43 million through the optimizer, which I think in the current climate we're talking about in terms of affordability and cost of living, I think really does go a long way to make sure that clients are paying an affordable premium, but at the same time actually using that additional discount to buy more comprehensive cover. And from an advisor perspective, what this means is that when clients are actually getting their optimizer discount, we're very often seeing them use that to buy more comprehensive cover. So they're buying additional riders such as income protection or serious illness cover, as well as providing additional protection, which, given that we know a lot of clients are actually underinsured, goes a long way to making sure that clients have the comprehensive cover that they need. The final point to note about this also is what we see from a policy perspective is that optimized policies are not only more engaged, they also, as a result, lapse less. So it means for an advisor, they're able to build up a book of highly engaged and loyal customers.
Great, thanks, Andrew. Well, I think some really interesting kind of statistics there, and obviously anyone watching can find out more by downloading. And there's a link in the chat, downloading the latest VitalityLife Claims Benefits report. But I think just reflecting on the conversation we had a moment ago, Andy, what's the value for advisors in sharing this data?
Well, I think it really makes it easier for the advisor to give advice because they can rely on the integrity of the report and the data within the report. So it helps them to reinforce the messages that they're giving at the point of the meeting. I mean, the other thing I think really that is key is all of the data that you see in the report is underpinned by actuarial, behavioural and clinical data that we've collected over a number of years and across the globe, and we're using that to reinforce all of the data that's in the report. Just a couple that probably pull out is 1 in 13 of the claims, as you've heard, are repeat claims. So people are unlucky enough to have a repeat occurrence of a condition or a condition deteriorates. So 1 in 13 is a repeat claim. And with a lot of other insurers, they just wouldn't have the ability to be able to keep that cover going. So you can get that with Vitality. And then the other point that stand out for me really is about 1 in 7 claims wouldn't have been paid under a traditional enhanced critical illness policy, not a core policy, but an enhanced policy.
Yeah. So
1 in 7 of those claims. So those sort of things really help the advisor to provide the advice and to make that advice nice and clear to the client.
Yeah, it provides a proof point, I suppose, doesn't it,
Yeah.
to a lot of those arguments that we might make about the cover we offer and things. Is there's the evidence to sort of support that. And
Yeah.
I guess the other interesting thing, and the thing that sort of stood out for me looking at those some of the latest findings, is that it's just the extent to which we're also delivering that kind of upfront value, the engagement, which I think is quite interesting, is it? Because we're almost sort of moving away from that kind of traditional role of protection insurance as being this kind of intangible peace of mind. And if you get ill or you pass away prematurely, we'll pay that claim. We're kind of moving away from that a bit, aren't we? When we look at some of those stats and those figures around the upfront value and the sort of stuff that we return to members, we're kind of moving away from that model a little bit.
Yeah, I think we're really changing the landscape of protection. And of course, this is something that doesn't now just get put in bottom of a drawer, which is what we used to say. It's just insurance policy goes in the bottom of the drawer. We heard from somebody in the industry recently who's had a claim on his policy, and he'd had the policy for over 20 years and never heard from the insurer. We're changing that that landscape in terms of regular engagement and contact with the clients, which also gives advisors the opportunity to go back to their clients. But ultimately, it's about healthier outcomes, and who doesn't want to live a healthier life and a longer life? Yeah. So again, that stat of nearly 5 years of added life for those people that most engage is a powerful number, I think.
And I guess this almost sort of talks a little bit to that discussion the industry has, Adam, around kind of added value benefits. And I'm not a fan of that term, but let's use it because it's what everyone's sort of used to. The added value benefits now becoming something that's much more sort of central to a plan and something that clients can engage with up front, before such a point that they may claim on the policy. What more, though, looking at kind of reflecting on some of the stuff that we've published, but also, I guess, thinking about some of the wider discussions, what more does the industry need to do when it comes to those sorts of benefits that deliver that upfront value and engagement?
As you say, pretty much every insurer out there has a package of benefits that clients can access, and a lot of those benefits are day-to-day benefits that can be used regardless of whether there is a claim in place or not. What we see, particularly across the market a lot, is there's some insurers that are really good at promoting those services and getting their clients engaged with them. And I would very much put Vitality in that bracket. But then there's also a number of insurers out there that rarely ever talk about them. They have them, and dare I say, it almost has become a bit of a tick box exercise for them to say, yes, we have them, but they're not promoting them actively to the clients, and therefore clients probably aren't using them as much as they would use some of the services that Vitality provides. And it's particularly interesting listening to what you were saying there, Andy, because the claims reports, any good claims reports, should demonstrate the proposition of the insurer that's built that claim report. And whilst I understand every insurer should come out with the headline stats around we paid this many claims, this is what it amounts to, for most people that's kind of irrelevant. It needs to be a higher number to demonstrate you are paying claims. But what most people will want to see, and what will really help advisors more, are the stats that prove and show the why. This is why you have this policy. This is what it's there for. And I think particularly in this report, it's demonstrated in bundles the why as to these are the types of claims we're paying. This is how people are engaging with us, particularly around the Vitality program, but also across all benefit types. This is what we're seeing practically across our book, and here's the claims that we're paying.
We're really transparent with the usage of the partners, the number of benefits that are received by the members and by the advisors' clients. And I think it'd be great to see some of the added value benefits that our competitor insurers promote, to see how many of those are particularly used. I think
it's starting to happen,
yeah.
But again, as I said, it's those insurers that want people to use it are coming out with the stats around how it's being used. But I think that's the missing link at the moment. There's a lot of these benefits out there, and there's a lot of clients and advisors that don't necessarily know when someone might use it or why, and the stats behind it will demonstrate that.
Yeah, and I think probably from Vitality's perspective, we want people to use them, as we see that reflected. Was it 600,000 health reviews completed in 2023? We want people to use these things, don't we? They're there to be used and engaged with, and there's real opportunities for an advisor, aren't there? And I guess this kind of speaks to your world a little bit, Julie. Through the academy and the training that you're delivering now, the sales as a force for good. And I would urge anybody who's not been on academy to get on there and register. We'll share a link in the chat. There's a lot of really useful stuff in there, and the sales as a force for good training I think is particularly powerful. But you mentioned earlier on the psychological barriers that prevent people from seeing the value in protection, and this speaks to that. How do advisors kind of overcome that? What are those barriers, and how do we overcome them?
It's quite a big question there, Rob. I think, we start off by, and if we can start off from the assumption that we are selling a product that people don't want to buy. Okay, would you like to sell insurance? Because that's ultimately what it's about. And the reason that people don't want to buy insurance is a couple of reasons, but First of all, it's because they don't see the need. So it's not going to happen to me, or it might happen to me later. It's certainly not going to happen to me right now. That's the first thing. And the second thing is that we have what we call present bias, and it's a psychological barrier which says that we prefer that immediate gratification versus anything that we could potentially experience in the future. And it's probably the reason why some of us here might have hit the snooze button this morning for an extra 15 minutes rather than got up and do some physical activity, because we get that immediate gratification when we hit that snooze button. And the problem with traditional insurance is that there is no immediate value for a client who takes out an insurance policy. I mean, the value is, like we said before, is there when you want to claim, at point of claim. And so that in itself is a problem. And I think that if we look at our claims and benefits report, it really does give those proof points about how the Vitality proposition is designed to overcome present bias. It's designed it's first and foremost designed to make people healthier. I mean, ultimately, that's why we have these rewards. And that's why we are, like you said earlier, encouraging people to do their health check, encouraging people to get a coffee, because it means that they have been healthier by doing that. That our bronze Vitality status members, and these are members, this is where you start off. You start off at bronze. They're not necessarily our highly engaged members. These members last year got 24% of their premiums back. So effectively, they paid 24% less through the rewards of the Vitality program. And why that stood out to me is that we would expect that from a platinum member, right? We would expect a platinum member to get a really good deal, and they certainly did. In 2023, they got 40% of those premiums back. But for me, it's about how you don't need to be a platinum member to have immediate tangible reward. And 24% back for me shows that the product is truly designed to overcome that present bias of I want a reward now, an immediate tangible reward.
Yeah, as you say, we're all probably experienced that. Any advisor listening will probably know that they have those conversations with clients who think actually spending X amount of money right now, I'd rather go and do something fun with that, and maybe kind of get around to insurance later on. And Adam, I think we're talking here as well about kind of long-term engagement, and I guess thinking about consumer duty, thinking about how we kind of generate real kind of client loyalty, that long-term engagement and checking in with the client through the use of these rewards and benefits and things that are now on offer. That's really key, isn't it? That's pretty important now.
Absolutely. I think consumer duty has changed the way that advisors should be perceiving protection and talking around protection with their clients, particularly because there's far more emphasis on value, and we've discussed throughout this the kind of value that someone can get from engaging in a Vitality plan. But there's also the emphasis on having to provide ongoing value throughout a client's life. This isn't a policy for a year, it's a policy for a significant period of time, and making sure that the client receives value from that throughout that period, it is really important, and something that advisors should be looking into in terms of not just the benefits it provides and is someone going to engage with it, but also is it going to stay with the client? Is it going to remain relevant from the core benefit, the life insurance, the income protection, the serious illness? So the ability for this policy to change with the client and adapt to a client's changing life is really important. We all know that someone's scenario doesn't stay the same for significant periods of time, so their protection needs are not going to stay the same. And there's a lot of really nice things around the Vitality proposition that can help adapt a policy to a client's changing life, particularly with the income protection policy, where you've got really good GIOs that can even change deferred periods if someone changes job. Because let's face it, not everyone stays in the same job for their entire career, and therefore their sick pay is likely to change with it.
Yeah. It provides an opportunity as well, don't it? These sort of benefits. I remember, I think it was Andy Walton from Mortgage Advice Bureau saying that it provides a kind of softer way in to have that ongoing contact and relationship with the client. You've got to kind of, through the rewards and benefits, through those annual statements, particularly that we produce to clients, showing the value we've returned to them, which provides those sort of soft opportunities, doesn't it, to re-engage with the client, make sure the cover's still appropriate, and ensure that kind of long-term suitability of the advice.
We've been doing the annual statements for a long time before it's become cool to ask for those, and but that is something that we've been doing since the inception of Vitality, and it does give the client a really good opportunity to go back to revisit the advice, make sure that that the policy is still correct for them, and most importantly to see the value that they're getting back and replay back the value that they've been receiving from the benefit from the plan, and if they're not, then to help them to get engaged.
Yeah, I can vouch for that as well. I'm a Vitality policy holder. I got my annual statement through. I popped it up on LinkedIn a few weeks back, where it showed the fact that I'd bought a pair of trainers and saved however much buying the trainers, and used quite a few benefits, and it was a really handy reminder, because again, people do forget where they got the benefits from. It's a really handy reminder that actually over the last year you have engaged, you have used this, and again, coming back to that retention conversation, I'm not going to move away from Vitality, because I can see what I'm getting and all the benefits I can continue to get, because I'm being once a year told exactly what I've got, and in pounds and pence what that's meant to me.
Yeah, it's not just a direct debit going out of your account and you've no idea what's that for. Our Vitality, but the other problem we face, was it, Julie, is that we know though that despite all we're talking about here, that as an industry, and we still have this problem of people, all of us still think, hey, that's great, but it's not going to happen to me. And therefore, whilst, I take what you're saying, actually I'm pretty confident that, 1 in 2 people might get cancer in their lifetime, but it'll be the other person that gets it, not me. And that optimism bias is, as we call it, that's a real challenge, isn't it? And just tell us a little bit about that, again, kind of how these findings sort of help with that.
Yeah, and it's a really good point, because that really talks to the fact that I think this claims and benefits report can help us to show the value of a comprehensive product. So when it comes to, like you said, 1 in 2 of us will get cancer in our lifetime. So most people will probably see the value in having a policy that will cover you for cancer, because the likelihood is there. You still might think it'll never happen to you, but that optimism bias is less strong. When it comes to a rare condition, a condition that is not necessarily covered by a traditional plan, and not even by a traditional enhanced critical illness plan, I think that's when the claims and benefits report really comes to life. And I think it was a stat that Andy mentioned as well, is that 1 in 7 of our claims that were paid out in 2023 would not have been paid by an enhanced traditional critical illness plan. And so we're not talking 1 in 100, we're talking 1 in 7. So there's a statistical certainty that 1 in 7 claims will not have been paid out by another provider. And I think that when we're sharing that stat with a client, the client then suddenly realizes that it's not as rare as they potentially would think. So that kind of statistical certainty, I think, really will go a long way to help clients to see why they should potentially be paying a little bit more for a more comprehensive product. Yeah. It shows where that value lies and helps to overcome that barrier of, it's not going to happen to me.
Yeah, and when we heard from those stats earlier, I think it was when we actually broke it down by age category, it was something like 1 in 4, wasn't it, in the kind of lower age categories. So the risk is increased.
One of the things I like about claims reports, when done particularly well as well, is they can be used to overcome those objections that advisors will quite often come up against. And one of the things I noticed within the report is the youngest clients to claim on both the life and IP policies was 21. And again, I think we mentioned earlier, a lot of clients will say, well, I'm too young for that. But one of the good things that you've done in this report is you've also explained why they claimed, which is just as important as the age bracket, because one of them was an accident. I think the life claim was an accident, and I mean, who at age 21 didn't know someone that had been in a car accident? May not have been a fatal car accident, but you're pretty sure that someone you know has been in a car accident. And looking at things like that, you can then say, oh, actually, that could happen to me. And all of a sudden, then people start thinking around, well, actually, maybe this may be worthwhile.
And when we were speaking the other day, Julie, you said about, I suppose like a tip for advisors is when you're having those conversations though, and reflecting on what Adam's just said, the examples you can use are those ones that are maybe a little bit more relevant to the demographic of client you're speaking to. Absolutely.
And I think that's for us as advisors, the biggest challenge is we've got optimism bias, right? Everyone has that. But the younger you get, that stronger that optimism bias is. So instead of talking to a younger client about the risk of heart attacks, cancers and strokes, let's talk to them about the risks of things that they're going to resonate with, and that is trauma. So it might be a traumatic car accident, a traumatic sports injury. The reality is the younger you are, it's more about saying, imagine you come back from a skiing holiday and you've injured your back.
Make it relevant to them.
Absolutely, and that stat that you mentioned, the youngest IP claimant was 21 and it was a spinal injury. So that's the kind of stat that you can use with a younger claimant. And the other thing I think that really resonates with younger people is mental and behavioral claims. And again, 19% from an IP perspective, that's almost 1 in 5 claims for IP were for mental and behavioral conditions. That's something that a young person can resonate with.
Yeah, it's a really common course for claim, isn't it, on income protection, as you say, that finding those examples, and there's the reports are littered with them, those examples that are likely to resonate. But I think just coming back to a second as well to consumer duty, we've sort of touched on this here with this. There's a real importance as well, isn't there, around that kind of quality and value point. There is a need now to think about the importance of the quality of the proposition, the likelihood of it paying out, the coverage it provides, how comprehensive that is, flexibility, rather than just price. And the findings in this report perhaps speak to that. But it is so important, isn't it, now with consumer duty here, there is a real emphasis, and you know that from the work that you do, the research you carry out, that quality point is so key, isn't it?
Yeah, absolutely. And I mean, if we take things back and look at what actually is value, what is it? It means different things to different people. For some people, the best value product may well be the cheapest product. They may be on a really strict budget, they can't afford anything more expensive. But from most points, and most of the clients that advisors are going to be speaking to, the cheapest product probably isn't going to represent the best value for that client. And what advisors need to be doing is looking at both price and quality side by side in order to have that wider discussion around, well, which of these products is going to give you the most value. As you said, more comprehensive plans are more expensive, but they're more expensive for a reason. They're more likely to pay out. That pretty much is the reason why they're more expensive. So having that discussion with the client around, well, you are paying more for this, but being able to back that up to be able to say, well, the reason for that is it actually is whether it's covering more conditions that you're more likely to claim on, or even if you're talking around some of the wider benefits, whatever that is, you need to have that conversation with the client in order to understand from both a price and quality point of view what is valuable to them.
Julie, I want to come back to you because we've spoken a little bit about these behavioural biases, how the reports help to kind of provide some evidence that advisors can use kind of practically in the conversations they're having. So we've touched upon that kind of, it won't happen to me. I think probably the overarching point as well that this report like this highlights is that need to not delay and put it off and think, I can do that another day. I can buy protection, I'll do it next week.
Yeah, and when I speak to advisors, I bang on about this idea of what impact would it make if we could educate our clients about uninsurability. And we're in the industry, we understand uninsurability, we understand how easy it is for a client to either be loaded or declined or deferred, or to have an exclusion. I mean, something as common as an abnormal smear test can have consequences from an underwriting perspective. But I don't think the man in the street actually understands that. You know, if you have a car accident and you crash your car, it's not like you'll never get car insurance again. And so I think that we should be going a long way to do that. And one of the ways I think is by asking a client the question, like, who do you think of all my clients, who are my clients that want insurance the most? It's not those with a mortgage or those with a family, it's those who can't get the cover. And I think that will help with two things. First of all, it will really get people to understand the immediate value of buying protection now, but it also will have a tangible impact on the fact that people aren't going to cancel their plans because they're going to be scared to cancel, because they understand that anything can happen. And it really does also talk to this problem that we have with younger people that just feel like they can procrastinate about it. They feel like they don't need to do it now. You know, we'll take it out one day when I'm closer to becoming injured. And that's, again, where those claim statistics can really help those sales conversations to help clients to see the value of insurance.
Yeah, absolutely. And Adam, you know, you spend a lot of time dissecting data from across the market, from all manner of insurers, and you know, you look at all this data day in, day out. Just thinking about how an advisor can use it, what are some of your tips in terms of, like, how kind of what should an advisor do with this? Reports like this, you know, the claim stats, the stories. How can they kind of use that in a practical way with the kind of client conversations?
It really is that document that can sit with you, go with you to any client meeting, that you can pull out and say, look, this is what people are getting from this product, whether it's a Vitality claim report or any other insurer's claim report, as long as it's talking around the claims and more than just the overall claims paid, but around how they're being paid, why they're being paid. It should help you have that more detailed conversation with the client around the why and the value that these policies are providing, because the policies are no more valuable than a point of claim. Yeah. That really is the point when ultimately insurers are fulfilling the promise, and it's a cliche in the protection market, but ultimately that's what these products are. They're a promise, and if you can't generate a claims report showing that you are fulfilling these promises, I'd wonder what you're doing in the market, to be honest.
Yeah. So certainly use it, engage with the data, and it can perhaps change your own thinking, but certainly it can also help to change your client's thinking as well, can't it? There's a huge opportunity, isn't there, Andrew?
Yeah, there absolutely is. I think if you look at Vitality, we're a relatively new insurer in the UK. We've only been trading for about 18 years, and we've got to the point now where, based on latest ABI data, Association of British Insurers data, if you combine Aviva and AIG, which I think we're probably entitled to do now, Vitality is the third largest provider in the UK sector across all divisions. And that's been done primarily through our support of the intermediary market. So, you know, big thank you from me to the intermediary market for supporting Vitality. But we're not complacent, and hopefully that doesn't come across as an arrogant position, but we're not complacent about that position, and we think there's a lot more we can do. But I think the main thing for me is around we're an innovative product provider that's trying to change the landscape, but also develop more modern products that meet the needs of the modern consumer, both now and in the future. So being able to develop the rewards program as we are, and you can expect further developments and exciting developments coming later in the year in regard to that. But fundamentally, it's about putting the client and the advisor at the heart of everything we do at Vitality. Yeah. And then just it's worth mentioning that we have the largest UK distribution team. So across the UK, we have over 100 business consultants supported by a number of regional teams, and those, along with our life specialists and the national account management team, are there to support advisors out in the field. So can go through a lot more detail in terms of what you heard today.
Yeah, absolutely. I mean, I'd definitely encourage advisors that are watching this, you know, to have those conversations with your contact, because they do a fantastic job of not only talking about the Vitality benefits, but also just helping advisors to have those protection conversations more broadly. just thinking, and so to sort of wrap this up, we're a forward-thinking webinar, so we have a think about kind of the things that are coming down the track as well. Just from each of you, kind of what would you like to see? What do you expect to see from the kind of protection market over the next year and beyond? What are your kind of thoughts to wrap us up? Andy, I'll start with you.
So it's been quite a difficult year, I think, for the protection industry for reasons that are known to everyone. However, what you've seen from Vitality is we've exceeded the market expectations in terms of development of the product, and I think that's just, we are reaching through to more and more advisors. I think what you also find is when an advisor really gets us, he or she really gets us, and we find that we get a really good market share from them. But it is about taking time to understand the product and the benefits and enhancements that we make.
Yeah. And Julie?
So I think going forward, what I'd like to see is I'd like to see providers helping advisors to have better sales conversations. So I think we're all really good at showing advisors where the value lies in our products and where our USPs lie. But certainly from a Vitality perspective, what we want to focus on is helping advisors to have better sales conversations. So improving those sales skills, letting them, helping them to understand those barriers more, and giving them real techniques on how to overcome those, be it through questioning or framing certain, your recommendation or something like that. So I think that really would be for me where I'd like to see more of the industry focus.
Yeah, absolutely. And I think an area we're already doing quite a bit in. So yeah, watch this space for some more. Adam.
So year ahead, bring it back to claims. I'd like to see better SLAs from insurers for a start. I thought I'd throw that in quickly. But on top of that, just more stories, more collateral that advisors can use to facilitate those wider discussions with clients around the value of protection. So if we're talking about claims statistics, not just the overall stats, but delve into those stats as much as you can to pull out the key messages and the details behind it. What's it actually telling you, and what stats can you bring out that will help advisors have better conversations with their clients? Whether that be through stats, whether that be through claims videos, just more, please.
Yeah. Stories are so powerful, aren't they? So, yeah.
I think there's a bit of an over-reliance on price as being the centre point of the advice, and I think more a comprehensive view of the products is using tools like your own to demonstrate the value is something that we'd like to see more of as well.
Yeah. Well, look, consumer duty isn't going away, isn't it? And I think it has changed the landscape. It probably will continue to change our industry for the better, ultimately. So, yeah. Well, look, thanks so much. Really appreciate you guys joining us today. Been a really, really interesting conversation. Hopefully you found it interesting and insightful, and hopefully kind of triggered a few thoughts and ideas about different things you can take away and kind of use in your own work. Make sure you do check out the Forward Thinking webinar page on the Vitality Advisor site, where you can register for any of our other upcoming webinars and also check out previous webinars on demand. And once again, thanks so much for joining us.